What's up, everyone? It's Caddy with Money Investing. Welcome on board for another Market Open live stream here. Thank you so much for joining in. Just give me a thumbs up if everything is working well. Just want to make sure that the audio and the video is good and we are all set. The markets are flat. We are selling off a little bit right at around 8:45. So right now we are starting to see a bit of a pullback here for the SPY, for the QQQ, and the Dow. Also selling off a little bit more aggressively. We were higher. We were close to 0.5% green. But right now we are starting to sell out. So today is pretty much the last full trading day for the week. Tomorrow is a holiday on Thanksgiving, of course. And then on Friday, the markets do close a little bit early. So so today, this week has been a very, very short week because of Thanksgiving. So here, let me just send the link in our Discord and we are all set. Perfect. We are good to go. All right, so we have the poll going on. Let me know, what everyone's expectations are. Yesterday was a big turnaround, so nice sweet reversal for the market, so pushing higher once again. And today is the big day. We've got the Federal Reserve FOMC meeting minutes, so that's going to be coming out from the first week of November. That's when the actual meeting took place, and this is just the minutes, which are going to tell us a little bit more about what was discussed during that meeting. So this usually does come out 3 weeks after the Federal Reserve actually takes place, the meeting takes place. So again, lots of insight into what took place and how aggressive the Federal Reserve is actually going to be going into their December meeting, which is going to be on 13th and 14th. So last meeting of the year, and it's only less than 25 days away, less than a month away. So should be very, very interesting. And it's going to, again, move the markets quite a bit because of the interest rate expectations and how much do they end up raising rates. John Deere reported earnings a little bit earlier today, so it is pushing up almost 3%. So we got a strong beat on both earnings and revenue, so pushing past $428. It's also seen a very nice rally along with Caterpillar since July. The stock's up a little bit over 45%. Year to date, the stock is now only up 21%. So it actually performed really, really well in 2022. And it's now almost approaching back up to all-time highs at $443 per share. So very nice move, strong beats on both revenue and earnings from John Deere. This right here is going to be the economic calendar. So again, we don't have a lot of things. Thursday, again, nothing there. Markets are closed on Thanksgiving, and Friday, very, very short trading day. But today we did get the jobless claims numbers, which I'll go over now. This right here were the jobless report. So we actually came in at 240,000. So this was much higher than what the expectations were. Consensus was 225,000. So this is what we are talking about, right? We're starting to see a little bit of an uptick in the actual jobless claims numbers because of the mass layoffs, right? A lot of these big tech companies, a lot of large cap, even small, medium businesses are starting to kind of lay people off. And the more we see that, the more people start filing for jobless claims, unemployment benefits, and the more that starts to kind of trickle into the unemployment report as well, which comes out on the first Friday of every month. So we're going to find out about that in the first week of December. So very, very substantial number. From a week-over-week perspective, prior number was 222,000, consensus was 225, and we came in at a little bit over 240,000, and the 4-week moving average is around 226, so we came in a little bit above the last 1 month average. Consumer sentiments also coming out, so that is going to be today at 10 a.m. Eastern. The consensus range is 55. Considering that the oil prices are lower, I actually wouldn't be surprised if consumer sentiment actually does improve going into this print at 10 a.m. So that's also going to be very, very important for the market. So Morgan Stanley says Twitter sentiment needs to turn to stop Tesla's $500 billion slide. So this has obviously been very, very sentimental. Everything that's going on with Elon Musk and Twitter, something that we have discussed on the channel in a lot of detail. And I think this is something that a lot of big institutions are also picking up on. I think Dan Ives was one of the ones that mentioned this first, talking about how this is a very serious situation, hurting Tesla's brand with everything that Elon Musk is doing. So Morgan Stanley kind of piling on even more additional feedback on what's going on with this entire situation. So they go on by saying, and I quote, "We see the situation at Twitter potentially exposing Tesla to risk along a number of areas, including consumer sentiment, demand, commercial partnerships, government relationships support, and capital market support. While difficult to quantify, we believe there must be some form of sentiment circuit breaker around the Twitter situation to calm investors' concern around Tesla." And that is very true. With Elon Musk now completely tied with Twitter, as he is the owner of that company, it's very difficult it's a very fine line where he needs to walk and make sure that he's not hurting the Tesla brand, which is the bigger concern here, which is the bigger company. $500 billion has pretty much been, down 60% from its all-time highs, coming from 1.1 trillion down to 500 billion. Of course, a lot of it had to do with the macroeconomic factors, rising interest rates, recession risk, and of course the fact that Tesla's valuation was a little bit too rich to support a $1 trillion valuation to begin with. But nonetheless, this is only adding insult to injury, unfortunately, for Tesla at the moment. Again, this is going to be something that we do talk about a lot on the channel in the future, and as things progress, we'll continue to kind of debate that as well. Oscar, thank you so much for joining. I really appreciate it and hope you are well and safe as well. Thank you so much for checking in. I really appreciate it. Good morning, everyone. Let's see. Black Friday marks a year since the market started selling off. Yep, so we'll see what happens this Thanksgiving as well. Usually, I think the Black Friday week, the Thanksgiving week, is actually slightly higher on average, but that's what we are seeing so far. The markets are on average a little bit higher, I think close to 1% for this week, and right now we're just flat on Wednesday. So we'll see how we trade on the day today. By the way, the poll is going on, so make sure that you do vote if you haven't already. Would really appreciate that. So Mill says Biden keep QE. On the other hand, inflation is going to be a long pain. I wish get it done with once and for all. Yes, inflation, we'll talk about that as well. They come out on the first week of December. So second week of December, December 13th is when inflation numbers come out. That's the same day when the Federal Reserve meeting also begins. So lots of things happening on December 13th and 14th. I just realized that December 13th and 14th, there's a lot of things. We've got the Fed meeting. We've got the inflation numbers. We've got the World Cup semifinals, which is going to be very, very important as well for all the football fans, of course. Yeah, so there's going to be a lot of things to focus on December 13th and 14th. And I'm sure there's going to be other economic reports that also come out during those 2 days as well. Anyway, investors are hoping to gain further insights into whether the Fed will slow interest rate hikes and what will take for them to be paused entirely. When the central bank's November meeting minutes are released on Wednesday. So again, today at 2 p.m. Eastern, we're going to get those meeting minutes. And speaking at a conference organized by Central Bank of Chile on Tuesday, Kansas City Federal President Esther George said interest rates might still have to go higher as the Fed works to lower inflation and constrain consumer demand. And concerns about the pace of rate hikes leading the U.S. economy into a recession has spread among traders, and they will therefore be scanning durable goods orders and new home sales data due to be released on Wednesday for clues about the state of the economy as well. So, so that's where we are. Recession risk, inflation risk, interest rate risk, all these risks are still pretty persistent given where we are in the cycle. And I also posted a video yesterday going over the 7 different scenarios for the market that are potentially possible. Some of them are actually very unlikely, like the soft landing. But there are a couple scenarios that I think are very interesting. So make sure that you do check out that video if you haven't already. We did talk a little bit about, what are the different scenarios with respect to inflation, unemployment, interest rates, and of course the economy and the earnings as well. So that's where we are. Lots of indecision, lots of consolidation. SPY getting up to that 200 simple moving average again. Pretty much getting up to that testing level. That's going to be sitting at 403. Call it 400, 403 around those levels. Right now we're just sitting a little bit under $400. Yesterday we closed at around 399.90. High for the day 400.07. So that's going to be that resistance. Very, very important, because if you get that rejection, we're pretty much rolling right back over. If you get that breakout, that's a big technical shift. Like that's a big breakout above that 200 SMA. And of course, the next levels to really be paying attention to is going to be 412 to as much as 428 for the SPY. QQQ's very similar pattern, although it has significantly underperformed compared to S&P and the Dow, and that is primarily because of Tesla. I think Tesla is the big culprit here, and the underperformance for QQQs has primarily come from Tesla because, despite the SPY pushing up 15-18%, Tesla price has pretty much fallen off a little bit over 34 to 35% over the last 1 month. So QQQ not pushing higher as much as its peers, but some of the resistance levels to pay attention to 305. That's going to be in line with that lower high and that 200 simple moving average. All right, so let's see. Good morning, everybody. Good morning. Good morning, crew. The Fed minutes will raise the terminal rate to 5.5%. So Letty, the federal minutes don't do anything. They are not a policy decision, but they're simply the minutes showing us what was discussed in our previous meeting. So they are not going to raise rates to 5.5%. That's just the meeting minutes. That's going to show us what was discussed. Think of it as like a transcript, right? Think of it like the actual Fed meeting was the earnings call, and this is just the transcript being released after 3 weeks. So that's what's going to happen. Ranjit, welcome on board. Thank you so much for joining. Citigroup upgrades Tesla, Eli says. Yes, but Morgan Stanley did point out to a big risk with respect to Twitter and everything that's going on with Elon Musk that we covered earlier a little bit. Oil prices, once again, plummeting down a little bit over 3.6%. So selling off quite a bit. Back down to $78 per barrel. This is very good news. And of course, on the month of November, oil prices are down over 9.5%, but we need to continue that momentum to the downside. And of course, if oil prices continue to slide lower, that is going to be good news. That is going to be very good for inflation and for the future prints that we get for CPI as well. So $76 per barrel is going to be that next support. We did get down to as low as 75.27, kind of hitting a new 52-week low, but buyers stepped in on November 22nd. So actually November 21st. So this right here was the level that we got down to last week, but you can see this very, very long wick where the buyers really just stepping up back all the way up to 79, close to $80 per share, per barrel. So we'll see if the price action kind of relates to something very similar from last week, or if this sell-off is going to be a little bit longer, more persistent, and if we continue to see that oil price slide lower. Volatility now, 1.6% green. Yesterday was a big crush, down 4.7%. The day before that, down 3.2%. So it's definitely been sliding lower. And of course, we're watching 19 closer to 20 levels, as mentioned by yesterday's market update. We haven't really seen the volatility trade below 17 levels all of 2022. It's been 11 months, and the VIX has not traded below 20. So actually below 17. So it's going to be very interesting for us to see what happens with the VIX. The moment we get down to 19, 20 levels, can we expect another spike? Because that's exactly what we've seen pretty much every single time in 2022. So this right here was the initial spike. This right here, another time. This right here, another spike, another spike, another spike. So what we'll see if it actually does give us another one of those jumps as the VIX trades down to low 17 to 18 levels. And of course, the 10-year yields. The spread between the 10 and the 2 down to now negative almost 80 basis points. So that's the steepest yield curve we've ever seen. We talked about this in one of my other videos where this yield curve is now the steepest in 40 years, over 40 years. The last time we actually saw, well, we haven't really seen the curve this steep ever, but the last time it was the next steepest was in 1989, 1981, around those levels, where the yield curve between the 10 and the 2 was that low. I don't think this chart goes back to 1981, but this is pretty substantial when it comes down to how much the 2-year yield is yielding versus the 10-year yield. All right, let's take a quick check on our poll. Let's see what's going on. All right, so let's see that. So the dots determine where the market goes. What dots, Arshdeep, are you talking about? Which dots? CPI, PPI print next month may push up the interest rates up. Yep, so CPI comes out on December 13th, so that is going to be, again, very important for the markets as well. But right now, we do have 61% expecting the markets to be green. Interesting. And 26% expecting the markets to be red and 13% flat. So make sure that you do vote if you haven't already. We've got over 240 people watching, but only 174 votes. So make sure that you do vote if you haven't already. I want QQQ to 269 by Friday, end of day, and then bounce. 269 for the Qs. Let's take a quick look. So, all right, right now we're at 286. 269 Ranjit would be down a little bit over 5.7%. By this Friday, tomorrow we're not trading. So tomorrow is a holiday. Today, we've only got today and half of Friday. So that's a lot that you're asking from QQQs to do in about 12 hours. 12 hours for QQQs to drop down 5.7% and then bounce a little bit is, I don't know, it's too volatile. I don't think we've got enough volume or catalyst on a holiday week to make that push. But we'll see. I mean, we do have a gap. You're right. We do have a gap all the way down to 268, 269. If I remove everything, then there's the gap right there that we gapped up. And this is after the CPI print, right? So we went up over 7.3%. So we do have a minor gap to fill here. But it's, I think the timeline need to be stretched out a little bit. timeline needs to be says expect the unexpected. Well, we'll see if it happens. We've only got what today, 6 hours of trading, another 6.5, and then on Friday the markets close at 1 p.m. So we're looking at another 4 hours of trading, so 10 hours. I doubt QQQ is going to drop 5.7%. In that time to kind of just come down to fill this gap. It could maybe next week, considering that, the market momentum is starting to slow down. We're losing steam a little bit. SPY's also struggling to break above its 200 SMA. So I'm fully with you when it comes to the bear market rally, and, we might see the pattern kind of fade over. And again, the first couple of weeks of December is going to be really very decisive for the markets moving forward. But yeah, the timeline needs to be stretched out a little bit. I think over the course of the next couple of weeks, maybe we see that gap fill on the downside once the market starts to roll over. All right, so Oscar says, I thought we buy when the VIX is high. So yep, that's exactly right. And I didn't say that I'm buying right now. Instead, and if anything, this right here says we're a net seller or covered calls. That's what we're doing. And again, covered calls act as a huge hedge, right? That's what they're meant to do. Like, it's a very nice way to generate some passive income and also at the same time hedge your downside. So if you are holding on to any stocks, if you have 100 shares of any stocks, you can sell a covered call. And as a result, when the stock does drop, that covered call actually ends up printing. That's what we did. That's what I did with Tesla. And of course, I would have, hindsight 2020, I should have definitely held it longer because Tesla's dropped quite a bit. So instead of getting to 75% profit, I would have pretty much, made 100% profit. Tesla has just been really, really brutal on the downside. But, never get too greedy. Definitely there's no way to predict exactly what's going to happen every single day. But it's just a game of managing risk, right? If you're able to manage risk, and for me, getting that additional 20-25% to give up, to get that additional 20-25% was just not worth the risk. So as a result, ended up closing out the option. But yes, Oscar, I fully agree. And when the VIX is high, that's the time to really be a net buyer. But right now, it's time to be a net seller or be selling covered calls to hedge your position. Yeah, at least by next week, we shall see that happening. Agree. I think that's a more likely scenario. That's a more sort of a good timeline for us to look into. By the way, Oscar, SoFi, I'm actually going to be doing a video on SoFi very soon. What's going on? SoFi is certainly hitting a new all-time low. Unfortunately, it's coming down to 466. I think there's been a couple of different reports. I think it's a little bit of a contagion effect with FTX as well, but seems to me very much of a nothing burger where SoFi has made themselves very clear, issuing reports that they were never involved with FTX. They've got nothing to do with FTX. So the only exposure to crypto they have is the ability for their users to buy, sell, trade crypto. I think that's the only thing that they offer. They don't offer any type of lending against cryptocurrencies or any type of collateral against cryptocurrencies. So I think that's something that they are pretty safe with. But the sentiment, just, really with this contagion from FTX has really hit hard a lot of these companies. So it's coming down to some very attractive levels. I mean, market caps at 4.3 billion, and just considering the sales growth, the revenue growth, we've already analyzed the company in more detail, but I'll be doing an updated video on this very soon as well, as it continues to kind of break below $5 and now, selling off down to 465, 470 levels. So I will be doing a video on that as well. Don't do it, Caddy. LOL, SoFi. No, I think it's getting a little bit more compelling now. It's definitely worth the risk. I mean, there's just some opportunities where, sure, the company is not profitable, the company is not generating free cash flow, but, at some point, all companies are that way, right? Every single company in the beginning was that way, where it was just kind of turning the corner towards profitability. Of course, not every business. I would say like over, very small percentage of businesses are profitable from day one. Very, very small percentage, right? Most of the businesses, most companies, don't break even for a few years, let alone profitability. So now SoFi 4.3 billion, considering the revenue growth, I think it starts to become very compelling. And if there is a path to profitability, which I do believe there is for SoFi, then the risk reward really becomes very, very tilted in the favor of the bulls and for the upside moving forward. So that's something that we will analyze in the future. All right, let's see. Thanks for explaining. I must have misheard. Perfect. Awesome. So 99.9% market may not crash the day before crazy Thanksgiving gatherings. Yes. So that's also true. I think we'll see potential new Tesla covered call strikes. So Matthew, a lot of that depends on what your cost basis is. That's one thing. I can tell you about the cash secured put strikes. If you ask me, Caddy, what's going to be the appropriate strike price for a cash secured put on a certain stock, I can tell you that because that is primarily based off of where I would personally base off of my fair value, my intrinsic value, and my technical support. Because if you're selling a cash like a put, you're putting a buy limit order on a stock, and if it expires in the money, you will be obligated to buy 100 shares at that price. So I can tell you that. But with covered calls, I can't really tell you what that strike might look like because number one, I don't know your cost basis. Number two, I don't know where you're comfortable selling that specific stock. So I've always mentioned, and I put a note, I try my best to put a note in our alerts for covered calls, is that make sure that your strikes are always above your cost basis, because if they're below your cost basis, you're pretty much letting go of your shares at a loss, unless that's the strategy, unless that's your plan for whatever reason, if you want to get out of a trade, if you want to salvage whatever loss you have. But if that's not the case, then make sure that your strikes above your cost basis. That's really important with covered calls. Okay. So, all right, let's see. Lady says, I read their customer reviews. I dumped at 515. SoFi has liquidity crisis. Or their customers' reviews. I dumped at 515. SoFi has a liquidity crisis. A lot of customer complaints about their money. Interesting. I haven't heard anything like that. Lady says, you don't do any research. You're probably holding Meta. Don't say you weren't warned. Okay. Very, very interesting comments, Lady. I really appreciate it. And thank you so much for the great insight that you provide. I will definitely look into SoFi, but I do disagree with you on doing research, and I also do disagree with holding Meta, which, again, I know there's a lot of debates around Meta, around Tesla, around Nvidia, a lot of companies, and there's always going to be disagreements. That's what makes the market, because if you're buying, somebody else is selling. But yes, I don't think that's the case with a lot of these companies. Anyway, all right, cash is still king. Yep, Milan, that's very, very true. Right now, at least it is. So I think that's Germany versus Japan live. I was watching the first half. Very, very interesting. Germany, of course, controlling the full game. Over, I think, 75% of the possession was Germany. The penalty, though. It was a very, very interesting penalty. I don't know if you guys are watching, but it was just, it kind of felt like the goalkeeper fouled. I forgot who it was, but fouled that guy. He fell over, then he got up, and then he fell over again to get that penalty. It was crazy. Like, if he got up, I don't think that should have been a penalty, but whatever. I mean, this World Cup, we've seen some wild stuff. Crazy stuff already happened, so it is what it is. I'm just waiting for the Portugal game later this week. So, all right. Do you think Tesla will run or turn back to positive side once the Twitter saga ends and Elon finds a new CEO of Twitter? I think the new CEO is definitely very important. I think that's the most important thing for Tesla is for Elon Musk is to find a new CEO so he can kind of take a step back and not really focus so much on Twitter. I think the layoffs and the hiring was very interesting. I've kind of read different reports, and again, you guys can kind of let me know in the comments as well. I've read a couple different reports. Number one was that Twitter had to fire a lot of people because they were the most inefficient of the big tech. Can't even consider them a big tech, but tech companies in Silicon Valley. So I think their employee count versus some ratio that they were looking at. So their headcount versus revenue ratio was the worst among all tech companies. So the layoffs and the resignations were like long overdue. So that's something that I think Elon was smart enough to do that. But at the same time, I read another report which suggested that just because the servers, just because the application, just because everything's working fine now after all the layoffs and the resignation doesn't necessarily mean that's going to be the case 1 month or 2 months from now, because things will start to break apart with bugs, with a lot of bots, with frauds. A lot of things will eventually happen. And if you don't have the right people or the right team to focus or fix that, there's a possibility that Twitter altogether, like the application might shut down or might absolutely, the servers might crash, right? And might not be able to handle all the additional sort of, traffic that's coming to the website. So there's been a couple different reports on that front. Not really, I'm not that technical enough to know like if, what's going to happen, what's the main, result of hiring and firing all these people. And, if Twitter's running on, let's say 700 people, what's going to be the consequences of that, let's say 6 months from now, depending on the additional users that they've gained. Elon also tweeted earlier that Twitter's gained over 1.5 million daily active users, I think in the last week alone, hitting a new all-time high. So they're definitely gaining more traffic, they're definitely getting more accounts, but they also need to make sure that they have the right people, right talent to kind of be able to manage that, manage that growth. So we'll see what happens. Hopefully he knows what he's doing. Hopefully. And of course there's a CEO. So if there is, I think that should be good. And that should be good for Tesla, in my opinion. So what do you think about TMF? TMF, it's a leverage ETF. So all I'm going to say is just be careful with any leverage ETF. It's just about being able to trade it the right way, and of course not over leveraging yourself, not oversizing yourself in terms of the position, and of course support level is going to stay put at $7. Really the focus needs to be on TLT. This is something that we did talk about in one of our other market updates, where this is a potential trade idea where you can take advantage of as the bond yields continue to sell off. And right now, we do have the yields dropping a little bit over 35 basis points. They have been selling off. Jeremy Siegel mentioned that the bond yields have pretty much peaked, and they are going to start to come down. And if that's the case, well, we've got a pretty substantial move to the upside on TLT that's already happened. It's already moved up 11-12%. And of course, since TMF is leveraged, it's moved up, I think, 20 to 30%. It's moved up 35%. So really just, be careful, understand what the risk reward is with TMF. If you're going to be in this, you're only trading this, in my opinion. Don't invest in leverage ETFs because, they can be very dangerous. Kevin says Twitter's dumpster fire. Just absolutely incredible. I think a lot of the new accounts here also have been part of the because of the reinstating, Trump and Kanye West and all these people kind of coming back to Twitter is also resulted in that increased activity again. But I don't know how that kind of shapes up from an advertiser standpoint, right? What do advertisers really believe is going to be the case when it comes to that type of content? So yeah, we'll see what happens. Twitter's a mess. Overhire people. Now people are not coming back. Yeah, it's just chaos. From outside looking in, it just feels like chaos. But I don't know what the real stories are from inside. I saw this meme of this random person holding an empty box outside of Twitter's headquarters, and he didn't even work at Twitter. I don't think he ever worked at Twitter. He was no way related to Twitter, but just doing an interview and telling the interviewee that he just got fired from Twitter. Just like a complete meme, just going along with that story with an empty cardboard box, and just saying, yeah, I just got laid off from Twitter today. I've been working there for 6 years. And he had nothing to do with Twitter. It was such a funny meme where it was just crazy. And the news media were just like all buying it. Okay, so tell us, did Elon fire you personally? Like, what happened? Like, my God, it's just complete chaos. Yes, Autodesk reported earnings. I'm going to go over Autodesk in just a minute. Let's see, the number of bug is a direct relation to the velocity, which is hopefully they would slow down with fewer employees. Twitter Saga is an example of why good corporate culture and retaining good talent is important. So, all right, Autodesk, let's just go over that very quickly. And before I do that, I'm just going to read a couple more comments here. Let's go. Too much on his plate, but the issue would want to work for him to satisfy his big ego. Yeah, that's also true, I think. Argentina ugly loss to Saudi. Saw that too. But yeah, the new CEO, I think that's really important. But anyway, let's just go over Autodesk. They reported earnings, I think yesterday after the markets closed. Wow, down over 8.8%. Miss on earnings, miss on revenue. They're already down, I think, a little bit over 30%. Actually, 45% now. So after the sell-off pre-market that we're seeing, earlier they were down 40%. Right now they're down 44, 45%. Year to date, they're down 25. And margins have compressed a lot for Autodesk this year. So narrows full year outlook, a strong dollar change in contracts format to weigh on results. So let's see. I'm more interested in the full year guidance. Okay, so in fiscal 2024, Clifford expects headwinds out of the gate. The strengthening dollar and the company's departure from Russia because of its war with Ukraine will make it tough for us to grow revenue beyond double digits and the revenue headwind creates margin growth headwinds, which likely means limited progress on reported margins in fiscal 24. Let's see. Do they have the full year numbers? The company lowered its outlook from billings 16 to 18% from prior view, and reduced its revenue. Cash flow was reduced to 1.9 billion to 1.98. Third quarter results met expectations. Adjusted EPS $1.70. All right, let me see if I can find any type of guidance here. Oh, there we go. So for full fiscal year 23, the company said it now expects adjusted EPS of 656 to 662. That is actually a little bit, that's lower from the high end, higher from the low end. Revenue expectations are $4.99 to $5 billion. So let's just take the mid guidance of 660. The price right now is at 190. So 190 divided by 660, we're looking at about a 28 times price earnings multiple, which is a little bit rich for a company that's expected to grow like in the mid single digits, mid double digits, like in the teens, low teens. I think that's a little bit high for Autodesk. But I'll do a more dedicated video because I do like Autodesk as a company. I think, SaaS company, great software, great products, but it's just a matter of being able to get it at an appropriate price, right? A lot of the times you'll find great companies, but just not at the right price, right? And then a lot of times you'll find right price, but not great companies, So, valuation might be cheap, but they're not great companies. On the other hand, you'll find excellent companies, fantastic numbers, great cash flows, revenues, earnings, great concept, everything checks off, but the valuation, but the price. So in those scenarios, you just kind of put them, on the watch list, keep track of them, create an alert, and of course pull the trigger once they get down to your fair values. Autodesk surprisingly has beat expectations for revenue earnings from what I can see is like 12 to 18 quarters in the past. This is the first miss on revenue and EPS since May of 2019. That was the first time they actually missed on both earnings and revenue. And this is the first time we've seen that since. So it's been about almost 3 years since they have missed on earnings and revenue. So, all right, let's see. Quick question: are you in the mood to buy something this week? Well, it really depends if we see any type of sell-offs in individual companies, right? I mean, my expectations are like once earnings start coming down, that's the only thing that hasn't been priced in yet. And I mentioned this in our Discord as well. Like once earnings get priced in, and that we know that they're going to be lower in Q4, they're going to be a 4% decline. In first quarter, I'm expecting at least a 10% decline. That's including energy. Once that starts getting priced in, I am a happy buyer in this market. I think that's the only thing that's just it's not getting fully priced in. Earnings and the economic recession. Economic recession to some extent, I would say is it's known and it's something that investors are pricing in, but earnings not so much. This is something that we talked about, I think, in one of our other videos. What was it? Let me see if I can bring that up very quickly. All right, let's see. So this right here was the chart, right? This is something that I talked about in one of my other videos, and I do strongly believe that we're like right here. We're like right in that red circle. Which simply means that, there might be more potential downside for the markets. And that is the price to say, and earnings are still yet to come down. They haven't been revised down to a level where I feel comfortable buying, because if earnings get revised down, you automatically have a higher P multiple. You already have a P multiple that's much higher than where we're trading right now. So, Anthony, are we out of trouble? I don't think so. I think earnings, I think that's the only thing. Once it gets priced in, I'm a happy buyer for a lot of these names. But until that happens, it's just, we're in this environment where markets are mostly trading on sentiment, anticipation, or whether we're going to see a pivot or not. And we're just kind of like going back and forth here at the moment. All right, so almost 60% expecting the markets to be green, 28% expecting the markets to be red, 13% flat. I'm going to end the poll here. And don't forget, We've got our private live stream scheduled for this Sunday. So Sunday, November 27th is when the live stream is going to take place. It's going to be a longer live stream for about 3 hours. So we're going to do that from 7 a.m. Eastern to 10 a.m. Eastern, doing it a lot earlier because I am traveling later that day. So want to get that out of the way as quickly as possible. So it should be very insightful. I've already got a list of names, people have started sending me stocks that they want me to analyze. So this right here are going to be some of the stocks that we will possibly go over. Again, I will be reviewing them to make sure that they're number one, market caps over $1 billion, volumes over 1 million shares on average trading day. And they are preferred. I would prefer them to be profitable. So if we're looking at 20 to 25 companies. So if I get 30 companies and 25 of them are profitable, 5 of them are not, I will choose the first 25 and then I'll move on to other ones if there's time. But I'm looking at first, consistent revenue growth, earnings growth. You guys know the check marks. You guys know the criteria that we're looking for on the channel, like quality companies and fresh ideas, fresh new ideas. I'm not going to analyze Apple in this private live stream. Yeah, a company that we've analyzed like 1 billion times. I'm not going to analyze Nvidia or Tesla. Done several videos. We're looking at new companies that nobody's ever heard of, like literally no one, okay? Nobody. And when I mean nobody, I feel like you should be the only person who would have known about this company. If I get that ticker symbol, I'm like, wow, okay, I've never heard of this company before. Thanks for bringing this to our attention. That's the power of our community that we'd want to leverage. And I think we come from a lot of different expertise. So I think that's something that we can definitely leverage and bring new ideas, fresh new ideas to our community. So that's what we're looking for. So yes, super excited for that. Make sure that you do join and message me on Discord what stock you want me to analyze. Brendan says TTCF, a deep analysis. TTCF deep analysis. Hustle smart, the negativity is insane. It amazes me how easily we are programmed to just go with whatever narrative is being pushed. I haven't heard any optimism from anybody. Good news, we're still negative. Hustle smart, that's a good comment. I appreciate that. I'm just really curious, are you talking about like the media in general, or are you talking about like us here? Are you talking about media or in general, or are you talking about us here? Really curious about that. Toronto Dave, just message me on Discord and I will add them to the list. That's it. In our Discord, just message me. It's my company. Magic is the ticker. So MGA, Nick, just if you could message me, that would be great. I really appreciate all your guys' comments here. VLO, MGA, ANON. Just message me on Discord and I will add them to the list of stocks that we can analyze during our private live stream on Sunday. So the process is going to be very simple. We're going to spend about 5 to 10 minutes looking at the company's fundamentals. We'll go over the revenues, the earnings, the cash flows, the balance sheet, the valuation, and we'll go over intrinsic values. It's going to be very conversational. So the regular polls, like I'll be doing consistent polls here, very quick polls on what the growth rates might look like, what the P multiples might look like. So I need your feedback and I'll be the one analyzing it. And we'll do some technical analysis, fundamental analysis. We'll kind of create that list and I'll share that with all of our members, and the recording will also be available after to watch if in case you're not able to make it. So okay, the entire media. Okay, that makes sense. And yeah, I think that's really what it is, comes down to. I think as I've mentioned before, institutions are positioned for the short term. So oftentimes you'll find a lot of the targets being posted as, oh, this stock can rally 40% in the next few months based on this catalyst, right? A lot of the times these reports are presented like that. And I think that's where the discrepancy happens. There's a big discrepancy there where institution investors, big money like hedge funds and whatnot, they focus very much on which companies are posting the best numbers quarter by quarter, right? Where that growth is going to be. And it's very interesting because if you take a look at where the money's been flowing every single year, which companies have been performing really well in 2022 or 2021, you go back to any year, it's more than likely, and I can confidently say it's more than likely the companies that perform really well fundamentally on a quarter over quarter basis that particular year, because that's what Wall Street wants. That's what's going to drive momentum, right? For any company, if in 2022, if a company reports earnings growth of 50%, that's really appealing. That's what you want to see. That's exactly where you want to be in terms of stock price reaction is going to be great. Excellent fundamentals coming in, and That's the prices. That's going to be the reaction from the stock pushing higher. And for this year, it's been energy. Everything else has just been in the gutter, right? It's just been straight down. You know, you come over to this chart right here. Let me just reload this one. And this is a good representation of what the markets look like in 2022. It's just everything's just been straight up down. You know where the 0% line is? The 0% line is all the way over here. This is the 0% line. So, you know, this is the yield. This is energy. This is the dollar index and mining and everything else straight up right here. Everything is just straight up down. No place to hide. No place. You talk about all 11 sectors in the S&P, crypto, the bond market, everything down. Real estate is the only one that's kind of held up, and energy. 2 asset classes. Not even an asset class, but yeah, commodity and an asset class. That's held up well. So Casey, I do have a portfolio percentage breakdown, so percentage allocation in our Patreon. So I will be updating that very soon, but I have everything on there broken down by geography. So where are all these companies located, broken down by sectors, and broken down by individual companies itself. So I have everything on there if you want to take a look. It goes over what percentage I'm invested in which company. Soren, will it go bankrupt? Which company you're talking about? Are you talking about Tattooed Chef? Okay, Tattooed, yes. They do have very limited time. You know, they have I think the middle of next year, by 2023, to really prove themselves whether they can be profitable or not. But it's just been, yeah, it's been brutal. I mean, for this company, 143 million market cap now. Wow. I think there's a lot of case studies. I think there's a lot of, if you can have a lot of learning lessons from a lot of companies, even if you're not invested in them, right? Even if you're not, like for Tattooed Chef, I've never bought a single share, but just following the progress of this company, there's a lot of lessons to be learned. And you can still learn lessons even though you're not actually involved. You're just observing, right? I've been on the sidelines observing Tattooed Chef. I'm still able to learn a lot of lessons. And have that key takeaway. I think a lot of us can do that. And of course, there's some stocks you're actually going to be invested in and you learn the hard lessons, but with some, you don't even have to be invested to learn the lessons from them. So it's not like, you know, Tattooed Chef just sold off 94%, we can laugh it off and just move on to the next one. But no, like instead, I really like to study this and, you know, really understand, okay, what was the main reason? Why did it happen? And what are the key takeaways that we can, you know, learn from this entire case study? So I think that's really important. That's definitely going to stick with us long term. Yeah, everything's straight down, meaning Enphase. Enphase is like kind of hold my beer, right? Yeah, Enphase is doing really well. I think the valuation is just screaming overvalued right now. Eventually, I do expect that to also rotate back down because Enphase's earnings have been really good, right? So if you come over to Enphase, you take a look at how good the earnings have been for this company. It's just been phenomenal. They've actually been raising prices, so you can see, like, take a look at the last 4 quarters for Enphase and the margins. Is it a surprise how the stock price has done well? No. You know, exactly going back to our point that I just mentioned, institutions playing a very different game. You know, hedge funds are playing a very different game. They are only in it to just look at companies that are going to do very strong quarterly numbers and are going to be having a very strong reaction to the market. And that's it. Once you make your gains, you're out. On to the next one. That's the game they're playing. They're not in it for the long term. They're not, most of them, like hedge funds, really aren't in it for the long term. And they're mostly looking to trade in and out. And of course, take advantage of quarter over quarter growth that we're seeing. And Enphase, take a look. Last 3 to 4 quarters, fantastic. Incredible. And as a result, you know, it's up year to date 73%. Just God bless Tattooed Chef. Yeah, selling rips, and you know that's what happens. I think a lot of it has to do with emotions too. I think. When Caddy did not stop laughing for 5 minutes, I realized it was not a good idea. Which stock are you talking about, Oscar? You're talking about Tattooed Chef here still? Enphase, what do they do exactly? So Alex, are you actually asking that question, or are you referring to the Upstart meme when the question was asked, what do they do exactly? Are you actually asking that question, or are you referring to the meme? Because if you're referring to the meme, that's super funny. That's really funny. But if you really want to know, I mean, they're just like solar microinverters. That's what they sell in the renewable energy space. Oh, you're actually asking. Okay. Yeah, no, they're in the renewable energy space, manufacturing, development of microinverters, solar panels, and stuff. So that's what they do. They've been very successful so far. Strong numbers, fundamentals have been very good. Strong, consistent revenue, earnings growth. They've actually got they've got an office literally here, like in my city, like where I'm at, about 15-20 minutes away. And I think some of their executives are also originally from India. So yeah, that's what they do. Very profitable company, but I think the valuation's a bit too high. And I think, again, goes back to our earlier discussion where we talked about oftentimes you'll find great companies, great balance sheet, great cash flows, great numbers, but the valuation's always that thing where, you know what, I like this company, but I'm not willing to pay that much. I think Enphase is one of those. I love to own it, but I'm not willing to pay like hundreds of times earnings multiple. But anyway, the markets are open. Today is pretty much the last full trading day of the week. Again, for a reminder, markets are closed tomorrow in observance of Thanksgiving. Happy Thanksgiving, everybody. Hope you all have a great day and are thankful for this market in 2022. Is anybody thankful for this market? I doubt, but is anybody thankful in 2022? What are you thankful for? Let me ask you this. In 2022, this amazing market that we've had. And Thanksgiving sucks. Thankful for breaking even for all the reds. Yes, I think that's what we're all thankful for, is just being able to survive for now. That's what I'm thankful for. But anyway, S&P here flat. We've got the QQQs, or the Nasdaq specifically, up over 12 basis points. The Dow Jones also flat. The yields continue to slide lower, down about 0.5% right now. I'm thankful for Jerome Powell about to be fired. That's savage. That's so mean. The market's presenting many opportunities. I'm grateful. That's good. That's good. Thankful for the lessons learned. Painful yet thankful. David, that's good too. Teaching lifetime lessons. Yes. Yeah. I'm thankful for the red mic. That's what I'm thankful for. The red mic came into our lives earlier this year, and just like that, put a big dent in the markets and then left. That was the whole job for the red mic for the last 8 months. So, but anyway, Amazon down 25 basis points right now. Tesla's up over 2%, so recovering a little bit back over 173. Apple seeing some buyers to step in. AMD also pushing up about 1% right now. So a lot of names here. A bit of a mixed day. Tesla's bouncing back higher the most. NIO's up 3.75. KL, thanks to you. Thank you so much. Appreciate that. D says, thankful for having met you, Caddy, and finding the channel this year. Thank you. I really appreciate that. That's sweet. Moment of silence for the red mic. Yes, definitely moment of silence for the red mic. It's done a lot of damage. Thank you guys, I really appreciate it. But yeah, the gilts, man, the gilts are really, I mean, that's the kind of price action we want to see for the yields. The US yield. Now we're starting to see a little bit of a divergence takes place between the gilts and the 10-year yield, right? So you've got the gilts pretty much all coming down. This is, again, some of these ones down here. They're coming down to 3%, 3.2, 3.3. And you're seeing the US yields kind of push higher. So what we're seeing now is a little bit of this type of action, right? So one of them is going up, the other one's going down at the moment. So, but the UK is definitely not in a great situation, not in a great position right now. Inflation super high, just crazy high, much worse than that of the US or any other European country for that matter. And yeah, they're probably going to be in recession very soon here. The There's an interesting idea in our Discord earlier today, which I'm kind of exploring a little bit. That's going to be SOXS, because SOXX is actually approaching, or is now starting to kind of break out a little bit back above its trending line. So that's the downtrending line, so lower highs. But we're kind of getting up to that 200 simple moving average. So if you come over to SMH, very, very similar price actions. We got up to that 200 SMA, getting a bit of rejection. And right now we're going up for another retest on that as well. Same thing with the SPY, right? SPY is getting up to that 200 SMA, once again to 402. Want to do a quick poll and ask you what you think about the SPY here. SPY breaks above 200 SMA. Rejection at 200 SMA. So again, this is another retest at that level, right? SPY getting up to that 200 SMA at 402. We've gotten rejected at that level in the past, so this is from August. Perfect rejection. Like we literally tapped that level, and that we started kind of rolling over, and right now we're just getting up to those levels once again. Christian, happy Thanksgiving to you as well. What level is the 200 SMA at? It's at 402.79. On the daily candle, that's the level for the SPY. For the S&P, that's going to be sitting at 4,059, closer to 4,060. But either way, they're both, the index and the ETF, they're both 1% away. So yeah, just about 1% away from those levels. Lots of conversations around Tattooed Chef today. What's going on? Tattooed Chef is flying today. Tattooed Chef fresh lows. What's going on? Wow, so 3%. Brandon, it's not flying, it's flying down. It's not flying right now. It's not the definition of flying, unfortunately. But yeah, SPY 402 is going to be that level. Make sure that you do vote if you haven't already. Curious. Ranjit says, bow the Dow. Yeah, the Dow has been really powerful. The Dow Jones is just absolutely incredible. It's now getting, so very strong resistance here, 34,240. This is the same level as where we were back in August as well for the Dow. But the Dow is only down 7.5% from its all-time high. It's just absolutely wild. Year to date, the Dow is down. The Dow is down only 6%. Wow. Incredible. The recovery has just been phenomenal for the Dow Jones. 19% recovery there. David says, might be worth taking a gamble on Tattooed Chef. Oof, I don't know. Do it on your own risk, man. I would. Yeah, do it at your own risk. So Tesla, 3% green now, 175. Apple also pushing through. AMD is pushing higher. Amazon, Nvidia is also pushing up 1%. So some momentum coming back in. And we got John Deere on very strong earnings and revenue beat. LAB is pushing higher. NIO's up. Alibaba's in the green. ZIM pushing up 1.7. The ones that are red, starting with Tattooed Chef down 4%. Then we got TrueLeaf, Clover Health, TrueLeaf. Again, then we got Palantir is down about 1%. But very flat day for a lot of these small cap, big cap companies. All Chinese stocks, very green, starting with XPeng up over 5%, NIO's up over 4.8%, and Li Auto's also up over 5%. Then we got Cybersecurity, so let's see, Zscaler, CrowdStrike, Fortinet, all of them selling off. Palo Alto Network 171. Did a video on all of them, specifically Palo Alto Network recently, so if you want to check that out. Let's see, energy stocks rolling over very, very well, as oil prices also continue to kind of plummet down a little bit. No way. Germany 1-1. Wow, that's incredible. Versus Japan. Japan's been playing good. It's just crazy how many underdogs, like underrated countries, are actually playing really well. It's incredible how a lot of these... Even Mofos went dumpster dive for Tattooed Chef. You guys are absolutely hilarious. But yeah, no, a lot of these countries are really good. You don't realize them until you see them in the World Cup. Like Japan, was playing really well against Germany. Saudi Arabia was really good against Argentina. It's just, man, I can guarantee like a lot of those players in Saudi Arabia's team are going to get Premier League contracts. Like a lot of clubs were watching, and some of the players was absolutely filthy when it comes to like the technique. But anyway, yeah, market's pushing higher very, very well because the Dow SPY is doing good. Yep, so they're definitely outperforming a lot. We're seeing QQQ's lagging so hard, Brendan, you're right. QQQ's been lagging a lot, quite a bit. Jobless claims are extremely bullish. Well, they're weak, so they're bullish in the sense that there's going to be higher unemployment, and if that happens, then of course the Federal Reserve there's going to be a higher likelihood that they do end up pivoting eventually. But the key there is inflation. You know, in one of the scenarios that I pointed out yesterday is scenario number 3. That's the worst case scenario. The last thing the Federal Reserve wants is an environment where unemployment's high and inflation's high. Because if those things, both of them are high at the same time, you know, what is the Federal Reserve going to do? You know, if you were chairman of the Fed, you know, and again, in all seriousness, if you were chairman of the Fed, if both unemployment and inflation was high, what would you do? You know, what would you do in that environment? Would you raise rates? Would you cut rates? Would you keep them at where they are? You know, it's a tough situation. So that's the worst case scenario. That's the last thing we want. Cool says cry. Oh God. But yeah, no. In all jokes aside, here, all seriousness, you know, what would you do? Bring more money. Walk into the Fed meeting with just like 2 really big bags of money. Just like, no, walk into the Fed meeting and imagine Jerome Powell walking into the Fed meeting with a giant printer, just like ready to just like print. Of course, cut as lag effect, and everyone know they bluffed with hikes. Well, it's a tough situation, you know. Then at that point, I mean, there is a case to be made that if unemployment actually starts going up, people will spend less and inflation might lag. And sure, the Federal Reserve in that scenario may prioritize unemployment, but with this Federal Reserve, you just don't know. You know, they're just like laser focused on bringing inflation down at all cost, that all they care about is the print, whatever the print is. Nothing around the print is being focused on. So Oscar says printing is the only option. Man, that would be worse. If the print, that would be so bad. If they end up printing in an environment where unemployment's high, inflation's high, yeah, that would literally just put the economy to bed for a long time. Because you've got a situation then where productivity is really low, people are unemployed, but they're still earning money so that they can still spend. So you've got higher inflation and higher employment going even more. It's just, yeah, that would be a brutal situation. So that's the worst case scenario. That's something that we already know, right? That's something I think we can all understand and conceptualize what that might look like. We may not have a good idea on what that might look like for the market because, well, if anything, it's going to be brutal. It's not going to be great because the Federal Reserve will have to make a big decision. But one of the good scenarios is scenario number, I think, 6. And that is if inflation's down, inflation's low, back down to the Fed's target. Maybe not down to the Fed's target, but has come down substantially on a year-over-year basis. You know, CPI print coming down to 3.5%. And unemployment's high, and economy and earnings are both in a recession. That's a good scenario for the market. It's a very good scenario. Because then you most certainly have the Fed pivoting. Absolutely. No doubt about that. You most certainly have the Fed pivoting in that environment. So James says Fed will pivot in February. So yeah, we'll see what the Fed ends up doing. We know they're gonna do it. We just don't know when and by how much. All right, everyone. So that's going to be it for today. Thank you so much for joining in for this market open. I really, really appreciate it. Make sure that you drop a like and, of course, subscribe to the channel. And don't forget, Black Friday is this week in just about a couple days. Tomorrow's Thanksgiving. So first of all, a very, very happy Thanksgiving to all of you. Hope you all have a great, fantastic day with your friends, family, and celebrate it well. Stay safe, and of course, enjoy. The markets are closed in observance of Thanksgiving, so no trading tomorrow. Friday, there's going to be a shorter trading day, so I think the markets are going to close at 1 p.m. Eastern. The bond market's going to close, I think, at 2 p.m. Eastern. So both markets are going to close earlier than usual. So today's the last full trading day of the week, and then, of course, we've got a big weekend coming up. So thank you so much, and don't forget, there's lots of sales going on for Black Friday. So TradingView is offering a 60% discount. So if you've ever wanted to use this software, this platform for technical fundamental analysis, create watch lists, create your alerts, all that stuff, they do offer 60%. That's only once a year. So they're offering that if you want to check that out. And of course, our fundamental and technical analysis courses are also 52% off, half off if you want to take advantage of that. Coupon code PIVOT is also available. So thank you so much for joining. I really appreciate it. Hope you all have a great day, and I'll see you all in the next